And Ntombenhle, it looks like the market doesn't know quite what to make of the Fed's announcements last night about this more quantitative easing, and we are seeing some weakness coming through across the board.
Yes, I think the market is still digesting the news out of the Fed last night, and I think what really boils down to is that a far less subdued recovery is now expected from the Fed, and that further easing measures have to be put into force by the Fed. So I think we've just been seeing a reaction of that market players taking it into consideration that things are not going to be looking as rosy going forward.
Is deflation still a concern for the Fed? Was that something that was addressed in last night's statement?
Absolutely, it's still a major concern, and the poster child, I think, for deflation is Japan. And I think what the Fed did was to try and avoid perhaps deflationary measures of perhaps pumping lots of money into the system, because that has not worked really as well as they expected it to. But by buying back those mortgage bonds and putting them into US treasuries, they're hoping that this would be an alternative way of spurring the economy and trying to bring some easier credit measures into the United States, as well as to try and spur consumer growth by keeping rates, consumer growth and spending by keeping rates at 0.25%. But it's still, the market is not really convinced. We've seen a lot of risk aversion coming back into the market as a result of that, because players are not really sure whether this is enough or whether this just does show that going forward the picture is not rosy at all.
And of course, so they were getting this new stimulation into the US economy. It really is just an admission that the US economy is not doing what the Fed expected it to do following the last round of stimulus.
I'm sorry, can you repeat that?
This really just shows that the US economy hasn't responded as you would have expected to the last round of stimulus.
It certainly hasn't, Stephen. I think a while ago they were talking about actually curbing back or bringing back some of the stimulus measures that they had instilled, and we've been seeing China doing that, especially in the real estate sector, and we've seen Europe also trying to put in some measures to curb back the spending, or the stimulus. And now America is actually doing the exact opposite, because they realize that it hasn't worked, and going forward they need something to spur growth in the economy, but something that obviously falls away or moves in the other direction of deflation, which is their major worry at the moment. So yes, it has not worked well, and further programs or any kind of stimulus that they're going to try and bring back into the market will be anybody's guess at the moment, but that is what the market is waiting to see what will happen.
Of course, we've seen some severe pullbacks on equity markets this morning. We had the Nikkei down 2.7%, FTSE down about 1.5% at this stage. Our market, though, only down by 0.5%, so why are we not reacting as badly as the others?
I think, some of our big gold counters, GFI, Anglos, as well as Harmony, have really tried to stay, and that's because of the gold price. I think as an alternative to the dollar, we've seen some players maybe trying to go back to the gold price and to bring it to about the 1,200 level. So we've seen some good news there, but perhaps there are still some risk players out there. Maybe it's an emerging market story where, if you're going to put your money anywhere, you might as well put it in emerging markets at the moment. So there are some risk takers out there, but I think that's why we've seen less of an effect there. But also I think our market is waiting for the manufacturing data coming out later today. I mean, perhaps there's expectations that it will be less than a drop of a drop to 6.9% from last month, 7.9%. So perhaps they're expecting it a little bit to come out a little bit better. But I think it is a wait and see at the moment. I think we're also waiting for the United States to come out, to open and see having been overnight there, what the players are thinking about the Fed's new measures and going forward to give us some kind of direction. But yeah, we haven't reacted as much as the other economies, but it's still a pullback on our side.
Well, just looking at also a trade balance expected out of the United States this afternoon. Of course, we saw the Chinese trade figures just a day ago that show that China hasn't been importing as fast as it was previously, and that doesn't bode well for the US's trade balance. So I'm sure a deficit still expected on that side.
Absolutely, I think there is a big deficit still expected in the United States. However, it will roughly be around about last month's figures. And I think mainly there that, like you're saying, export demands from all over the world have been very subdued. China has not been growing as well as people had expected, so they're not importing as much from the United States. And also imports in the United States have also been subdued because consumer spending is definitely not there, and and that then just tends to maybe put downward pressure onto the trade deficit.
Just looking locally, we had shares in Naspers really pulling the market lower this morning, down by close to 2% at one stage, trading at 299 Rand. Has since retraced a little bit, and I was just looking on the news wires, and it looked like this was all to do with Tencent, which is Naspers' Chinese associate company.
Yes, Tencent did come out, a few minutes ago, saying that their profits have actually, their Q2 profits have actually risen 61%, and that's mainly on the back of their online gaming and instant messaging, and as well as advertising sales out of the company. So it has done pretty well, and we saw the reaction in the Naspers price in our markets, where it was trading below 2% earlier on today, but is now trading just above minus 0.05, I think it is. And so we've seen a nice recovery there, but obviously it is a very bad day in the markets today, so we won't see some positive performance out of Naspers today, but hopefully when the market does settle down, we'll see them reap those rewards, and also it shows that there'll be maybe some nice upside potential to Naspers results when they bring them out.
Ntombenhle, in the meantime, until that market settles down, would you still advise investors to be a bit cautious in this market?
I'm sorry, can you repeat that?
Would you still advise investors in the meantime to remain quite cautious in this market, though, just due to the volatility we're seeing?
Yes, I think caution is advised at the moment, but I think perhaps should anybody want to be moving into any stocks, the defensive stocks are more likely to perform better in this round. But going forward, I think it is a very tough market to be trading in, and it is it's very tough, especially when one day is not going to be necessarily a continuation of the previous day. So it's very difficult to put forward any kind of view or any kind of long-term view. But yes, I think caution and risk aversion will be maybe what will be leading the market further on.
Directly, we have to leave it there. Thanks very much for your time this afternoon.
Thank you.